All right, let's get things rolling here. And in the way that Khaki Rodway on the last panel asked a question, I'm going to start with a question too. And that is, who here enjoys paying their homeowners and auto insurance bills? I thought so. Yeah, so we're going to talk about space insurance today, which is a little bit different and very interesting. I have spent the last 40 years in space insurance, and it's been a very rewarding and exciting business. So what we're going to do today is we're going to talk about why insurance is important for startups and for large companies and how it helps to foster the space industry. So what I'm going to ask my two colleagues here to do is just give us 60 seconds on how they got where they are, and then we'll start role playing where I'll be the client, and Patton will be, as he is, the broker, and Rob will be, as he is, the underwriter. Now, their bios are in the booklet, so we're not going to go through the whole bio thing, but just Patton, 60 seconds on how you got where you are.
Sure. So I work for Marsh, which is an insurance brokerage that's actually located in Midtown, just a few blocks away. I started there in the early 2000s and was actually hired by Rob Schenone. At the time, he was working for Marsh. So as you can see, it's a pretty small industry. Everybody knows each other. It's really a close knit group of people, both on the insurance side and on the client side. But long story short, I'm not an engineer. I really started my career on the insurance side and have been on the insurance side ever since. I did spend a few years on the underwriting side, focused more on aviation, but I came back to focus on space about 14 years ago and have been a broker on the space side ever since.
Thanks, Patton. Thanks, everyone, for being here today. Name's Rob Schenone. I work at AXA XL. My office is in New York also, but downtown. Like the way everyone answered the question about insurance, when I got out of college, my dad was in insurance. I'm not going to insurance. How boring is that? About a year later, I said, Dad, what about insurance? It sounds pretty interesting. So there was an opening in the aviation group at Marsh. This is 1990. So I started there, and they were just, space insurance at that time was just getting going. I met Chris at that time, so talk about a small world. So I've been involved in space insurance since that time, half of the time as a broker, and then the last 14 years has been as an underwriter. Yeah.
And I'm Chris Kunstadter. I am the president of Triton Space. Until last August, I was an underwriter at an insurance carrier for 40 years for several companies. And I left there in August and set up my own consulting firm, basically helping companies and people and governments navigate the landscape of space risk. So advising them on how to handle risk, how to make sure that they are able to manage their own risks, whether it's insurance or whatever. So what I'd like to do is, as I said, I'll play the role of the client, and we'll walk through the process that a company would go through. Typically, let's say a startup, because a lot of the people in the room are from startups or would like to have a startup. And we'll talk about why insurance is important and how the process of getting insurance goes about and what the pitfalls are. So I'll start off by saying space insurance is really an enabler of innovation and investment. It really is. It's the way that investors will get comfortable with something as risky as the launch of a rocket or the operation of a satellite in orbit. Just this morning, there was the launch of the 6th mission of the Firefly rocket from California. And it failed. Most rockets work, most satellites work, but failures do happen. And so it's very important to make sure that companies and their investors and their regulators and so on really are comfortable with the risks that space involves. So let me start by saying, let me pretend to be a startup space company, right? Let me just say, that I have this idea to mine helium-3 on the moon. And it's just kind of a wacky idea, but it's a very important resource for so many things here on Earth. And I go find an insurance broker, and of course I choose Marsh because Patton's a good guy. And I go to him and I say, Patton, I'm starting this startup. I'm going to launch in 3 or 4 years to go mine helium-3 on the moon. I think I need insurance, but how do I manage my risk? So why don't you tell me how you would address that with a client?
Sure. So, first off, from our perspective, I mean, we work with a lot of, established space companies, but we also work with a lot of startups. And I think with any company, what we need to understand is what the mission is and what they're looking to insure. And so typically we would break it up into phases. And most space insurance is focused on asset insurance, so property insurance, essentially, for the mission. Is the mission performing correctly? And oftentimes the insurance amount is based on those asset values or the cost of the launch service. So if you look at the overall mission holistically, how much is this costing you to get this asset into space or maybe to the moon or whatever your mission is? So we really want to break that down into different phases and look at those phases and look at what you would like to insure those during those phases. You may decide not to insure certain phases because it's too expensive. For whatever reason, you may not want to insure certain parts of the mission. But if we break down the mission, we're looking at typically the transit and pre-launch phase to the launch site. I mean, you could in theory even back up earlier, looking at the actual manufacturing and production process. But typically the space market is more focused on after the manufacturing process. Once the spacecraft is completed and the shipment to the launch site and those pre-launch activities. Regular transits are pretty standard, but once you get to the launch site, right, you're starting to assemble and integrate the launch vehicle with the satellite, and things get a little different. So then the second phase from that transit and pre-launch phase would be the launch phase. And typically for, I would say, 90% of insurance missions, you would insure that launch phase. It's very unusual to insure just the satellite on orbit and not insure the launch. Typically, it's packaged together. So if we're looking at that launch phase, we'd be looking at, well, what kind of launch vehicle are you going on? Obviously, if you're going on a vehicle that's had a lot of success, it's going to be less expensive than if you go on a vehicle that's relatively new with not a lot of track record. And then after that, looking at the overall mission itself, we're going to be looking at what is the heritage of the spacecraft and what that might be. And so we would work with you to look at, okay, what might the cost be? How are we going to interface with the insurance market? And then after you're ready to put together a package to talk to the insurance market, then we would go to Rob and start talking to him about the mission. Now, even before that, we may want to start building the relationship with Rob. Because if we just come to him at the 11th hour and say we're ready to place this, and they've never met you, they've never met the company, he may be less willing to support something that's a bit unusual. So it's really important to build those relationships. As we all talked about before, it's a small industry. Overall, the insurance industry in space is even smaller. And so building those relationships early is really important. But regardless, at the end of the day, we're going to put together a package of the risk, and we're going to present it to an insurance company like Rob, and he's going to come back to us and work with us on a price. Now, we may be working with him on the coverage. We may be working with him on a host of different things. Rob, for instance, is very good with putting together a coverage and policy wording. So we would work with him on that. And that would also be a process that we'd work on with the client in conjunction with him. Because what you're looking at here is really not a cookie cutter product. It is a manuscript product that we develop to cover a specific mission. And so we've got to spend a lot of time with you, and we've got to spend a lot of time with the underwriter to develop that product to cover your specific mission.
So as a startup doing this moon mission, am I required to buy insurance for the asset itself? Is there like a statutory requirement or a legal requirement, anything like that?
That's a good question, Chris. So In most instances, there is no requirement for insurance for the asset itself, for the property insurance. And for the liability insurance, usually for the launch service provider, particularly the US, is going to be responsible for that as required by regulations. You don't have to worry about liability insurance during the launch. In orbit, if you are a European company, you have some requirements to purchase insurance, but as a US company, you typically would not have any requirements to purchase liability insurance. So most of those insurance decisions are really going to be up to the company, and the company can decide to insure or to not insure, or you might decide to partially insure certain phases of the mission.
Excellent. Okay. And to your point about how small the space insurance market is, there are globally only between, say, 100 and 125 people in the whole space insurance industry globally. And only a very small portion of that is here in the US. So it really is a very close-knit community. So I've come to you, you've told me that I need to brief the potential insurers. So I go and do a presentation to Rob and the other companies that might accept the risk. Rob, why don't you walk me through then how you decide how to design the coverage working with the broker, but really more importantly, how you go about pricing it?
So my role is an underwriter. So I take the risk on. So if it doesn't work as expected, then we would indemnify or pay the Marsh, so they would pay the insured. So Patton did a really good summary of what the risks are. To clarify, they may just come to one insurer. If it's sum insured is small, if it's a few $1 million, they may just come to us. If it's a big sum insured, a bigger satellite, and maybe even a bigger risk of a couple $100 million, they'll go to all 25 odd satellite insurers that are in the market. But when they come to us, and they've done a ton of work. That's why I stopped being a broker. They do a lot of work ahead of time. When they come to us, everything's nicely organized. It's a nice presentation, and we're seeing all the fruits of their labor in one package. So it makes it pretty easy for us to analyze the risk. So I'll focus on the period from launch onwards. Yes, we do some pre-launch stuff, but it's really small. So we'll focus on the launch and thereafter. The most important thing we look at, or the two most important things we look at, is the launch vehicle and the satellite. So if it's a proven launch vehicle, it's reliable, it's launched a bunch of times, and it's been successful, we have a good idea of what the rate's going to be and what the expectation of the market will be for that risk. And then the satellite, we look at the heritage. Who built it? How many times has it flown? Are there any single point failures? We're providing warranty insurance. We're warranting or giving the insured the warranty that their satellite is going to work as expected. So if there's a loss of operational capability of that satellite, it's supposed to go to the moon in this example. They don't make it to the moon. Well, they've lost that asset, is no longer worth anything to them. So we indemnify them for that. So it's much different than any type of liability insurance. This is first party coverage. We're insuring them for their loss of their asset. So we need to understand how the asset works. So I'm not an engineer, but I have worked with 3 other engineers, and they would look at the risk very closely and really look hard at those things that I mentioned before. So we would do the same thing with Patton talked about. We would rate them, even though we might provide, for this example, launch to the moon, landing on the moon, do whatever they have to do in the moon, and maybe come back. And we would rate each of those individually and probably just give one package rate for that coverage. But it is important also to know who the insured is, what they're doing, what their history is, how much oversight they will have over the launch vehicle provider, and the satellite manufacturer is incredibly important. So we try to look at everything that may impact the performance of the launch vehicle and the satellite as it performs. As Patton also said, the policy wording is all manuscript. Every time it's a fresh wording. Yes, there is some boilerplate terms and conditions of the wording, but the loss formulas are all specific to that mission. So those have to be understood, and we have to make sure, and we're appreciate Patton's comments that we're good in designing coverage, but we really spend a lot of time at our shop making sure we understand what we're insuring, Because if there's a problem, we want to be the first to pay. We want to be the first to adjust the claim and indemnify the insured for what they've lost. And we can do that if we understand the coverage, and we will understand the coverage. And we'll spend a lot of time during the placement process to make sure we understand that coverage. That's what we do.
Excellent. Yeah. So, as I said at the beginning, most rockets and satellites work, but sometimes they don't. Patton, how do you manage the client's reaction if there's a failure? How do you give the client the comfort that you're going to take that process of the insurance that you placed and help them navigate that? Because they'll be devastated that they've lost their asset, their mission, whatever it is. So how do you handle that?
Yeah, good question. I mean, it can be obviously very difficult for an organization if they have a failure. One of the reasons you're buying insurance is obviously to mitigate that risk so that if you have a failure, you can launch another mission. But certainly there's an emotional element that occurs when you have a failure and you have a claim. But it's really, it's our job as a broker to make sure that you're submitting the information that you need to, and we're doing whatever we can to help you get that claim paid, but also paid expeditiously, because it's great if you get a paid claim, but if you get it paid a year after the claim occurred, it doesn't really help you as much as it could, particularly if you've got a smaller startup organization. Those funds are going to be critical to paying standing Army costs and getting you back on your feet for the next mission. So it's really important to engage, quickly and make sure that you're submitting the right information to underwriters so that, someone like Rob can pay the claim immediately. And we've had instances where Rob has paid a claim, for instance, for one of our customers that was a launch vehicle claim within a week, which is incredible. To get a multi-million-dollar check in a week is something that it doesn't happen that often, but it's also it is a huge relief to that client. Conversely, you can have more complicated claims, and this isn't necessarily isn't necessarily something that the customer has done wrong or the broker has done wrong, or even the insurer has done wrong. But particularly if you have satellite lifetime issues that develop, and you're trying to pay claims for more sophisticated partial losses for spacecraft on orbit, it can be a little bit more complicated. And that's why we have engineers on staff. That's why Rob has engineers on staff to help quantify those claims correctly and get them paid quickly. But obviously, figuring out what the right amount can sometimes be challenging.
Excellent. So that's the process of going through the placement and adjustment of insurance and claims. Rob, the space insurance as a product is notoriously volatile as a line of business. In auto insurance, if you're insuring 20 million cars in California, you know to a very fine resolution what your failure rate is likely to be. So it's much easier to price that insurance. In space insurance, in 2023 and 2024, both years combined, the premium across those 2 years was roughly, let's say, $1 billion, and the claims across those 2 years were roughly $2 billion. So it was a very difficult time for insurance companies, for the managements of those companies to say, why are we in this business that is so volatile, where we can have such good results one year and such bad results another year? So how do insurance companies address that appetite for risk? How do insurance companies convince their capital providers and their stakeholders that this is a business that's worth continuing in if times are tough?
Yeah, great question. And it is extremely volatile. But my company, we're a very small group, part of a larger group, and then it's part of a bigger group, and it's part of a bigger group. So we're really small. So I sort of wonder, as Chris mentioned, we had $1 billion in premium for the market and $2 billion in claims. I'm not that good at math, but I don't think those are good 2 years. Yeah, it was really tough. But we showed them that since the time I've been involved, since 1990, that the space insurance has been very profitable. We've been profitable. And you're going to have ups and downs, but all markets are going to have up and downs. All lines of insurance are going to have ups and downs. And you hope as an insurance company, when you look at the big picture, that they all offset and it becomes a very profitable year for the company. So some people in our company like the volatility because they don't know what they're going to get. And other people are like, no, we want the 90% combined ratio every year. We want you to be the same, but that's not what we do. But we have proven to be very, very profitable over the last 10, 15 years. But it is difficult when you have, those 2 years you mentioned, it was difficult going to management. It seemed like every other week with another event taking place. Yes, you miss some. That might be lucky, might be good underwriting, but you hopefully overall you miss more than you get, and you do better than the market. And luckily, that's what we have done. That's what has given confidence to our management that they should stay with it. And we also, it's such an incredibly small market. I always say that our market should be an Econ 101 class because supply and demand is so prevalent in what we do. You saw those couple of years, rates were really going down, the losses take place, capacity pulls out, rates go immediately up. And it's not like auto insurance or workers' comp insurance where it takes time to turn that big ship. With us, it's the next day, rates will change. Coverage doesn't really change that much because we provide an all-risk policy. Yes, we have a few exclusions in our policies, but they're war, terrorism, cyber. So the T's and C's don't change, but the premium rates can change very quickly. And that's really because of the change in capacity that took place after those few years when a number of smaller companies pulled out of the market and rates changed very quickly. And that helped us in telling our management, listen, just stay with it. The rates are going to get better. Things are going to turn around, and they have. So it's really, you have to force your management to have a long-term outlook. And and it makes it difficult for them to appreciate that. It's also difficult just from like a premium point of view. Insurers are used to renewals and how much money they're going to get every year, more or less. For us, we start the new year off with, 90% of our business is brand new. So we don't know what our income will be or what our premium will be. So it's a very difficult risk for a lot of our management to understand, but we spend a lot of time educating them, and so far so good.
Yeah, and Rob raises a couple of interesting points. First of all, it does take that long-term view to stick with it. So roughly 40% of the losses that space insurers pay occurred during launch. Launch is 10 minutes or half an hour. I mean, that's a very short time frame. And to convince the management that they need to look at it over a 5 or 10 year period can be very difficult because all they see is the video of the rocket blowing up on CNN, and they just go, "Whoa, did we insure that one?" So it's very interesting. The other point is that your homeowner's insurance policy covers 10 named perils. It only covers those 10 things: burglary, fire, windstorm, whatever they are, but it only covers those 10 things. Space insurance is different. Space insurance is what's called all risks. So a space insurance policy for the asset covers everything unless it's explicitly excluded. We exclude war and warlike activities. We exclude cyber. We exclude terrorism. But pretty much everything else, whether it's a micrometeoroid or a bad command sent from the ground or a poor design of the rocket or the satellite, it's usually covered. So it's a very black and white type of business. It's really very, pretty quickly how successful you've been with the insurance. So let's talk a little bit about the supply and demand issue. And Patton, the demand for insurance has decreased significantly. And the way I'll express that is, we used to insure satellites that were $300 or $400 million on a rocket, and maybe you'd even have two of those on the same rocket. You could have $800 million on a single launch that that's the capital that you need to provide to do that insurance. Nowadays, SpaceX has brought the cost of launch down. Smaller satellites are much cheaper. So the amount of insurance that these companies need has decreased significantly. Not only that, but as more and more companies, more and more satellite operators are deploying constellations, they don't necessarily need to insure every single one of their satellites. Maybe they can insure the fleet, or maybe just not buy insurance and decide that their risk management is redundancy in their constellation. So how do you help these clients to make the decision whether to buy the insurance or not? You talked about the process of educating them on the products that are available, but what if they come to you and they say, I don't really need insurance, there are other ways to manage my risk? What other options are there for companies?
Sure. So from a insurance broker perspective, we represent the customer. So when a customer comes to us, we represent them in the insurance market. It's different from a, typical insurance agent like you might have at State Farm, where you're an agent of the insurance company. No, we as brokers represent the customer and the client, and it's really our job to work with you to figure out how we can best manage your risk. And it may be managed by insurance solutions. It may be managed by a mix of insurance solutions and self-insurance. We really have to work through that process with you, educate you on what goes into procuring insurance, what the costs are, and looking at your mission holistically to figure out what the best approach is going to be for you.
Yeah, very interesting. And as we said, the space insurance market is very small. But I get contacted once in a while, I'm sure the two of you do too, by people who say, I'd like to get into the space insurance market. I guess my question that I'll ask both of you to address is, what education, experience, skills do you need to become a space insurance professional, whether it's a broker or an underwriter? What background really helps? Or maybe no background. I mean,
well, it helps to be hired by Rob. That was the way I got it. But no, in all seriousness, most of the people that are in the industry are either coming from the insurance industry or they're coming from the space industry. And so if they're coming from the space industry, they're going to be on the quote unquote technical side of the business, and they may be, a broker as well. But they're going to have the technical expertise to help design coverage around the specific mission and risk. If they're on the insurance side, they may have a financial background, but their role is going to be more on the day-to-day broking side, the transactional side of the business.
It's a good question. And I was just sitting here while Patton was talking about, like, who's coming into our industry new. And it's really exactly what Patton said. Most of the people are not right out of school. They're mostly from the insurance community already, or really, I think the majority that have been hired, going through my head of the recent hires, have been from industry. So they're engineers, and have a business, usually have some type of business background, and they come and join as a broker or as an underwriter. So when I first started, we had a handful of engineers. I mean, probably a very small percentage of engineers. Now it's, I'm the rare one. I don't have an engineering background. I mean, it's probably 90% of the people have some type of engineering background now. So I think that would be very helpful for someone who wanted to get involved in it. But I still think there's a great need for people like Pat and I, who are not engineers, understand the business. I hope that there's a great need for us, at least for a few more years, that understand the business, can put deals together, and can communicate with both the engineers and the insurers. Mm-hmm. But I think the biggest thing now, if you want to get involved, you have to have probably some type of engineering background.
So technical skills, communication skills, a willingness to learn the business side of things. Yes, very, very good points. Just one story I'll tell. On the last panel, there was a lot of talk about art in space. Rob and I actually worked on a very interesting insurance program one time. It was, I would say, about 7 or 8 years ago. The Blue Origin New Shepard vehicle that carries people and experiments up to on suborbital flights, they commissioned a famous artist, Amoako Boafo, to paint the parachute covers of the Blue Origin capsule. The covers were painted, the vehicle was launched, the capsule was launched, the covers pop off and they come down by themselves, and the capsule then comes down under the parachutes. They recovered those parachute covers and exhibited them at galleries in, I think it was in the Chicago area. But it was interesting, and I think we worked with Marsh on this. It was
You forget, but yes, you did.
Yes. It was interesting because it was fun to work with our art insurance team. Our company has a very large art insurance practice. So it was fun to work with them to craft this insurance coverage that covered the parachute covers while they were being painted, and then covered them during the launch, and then covered them during recovery, and then covered them during the transportation to the galleries and so on. So it's just an example of this very interesting juxtaposition of different types of insurance across a space program where you wouldn't really expect to have insurance on art in space, but it was, yeah, it was very, very interesting.
Yeah, that was very interesting to do, to say the least. But I reminded me that, I mean, a lot of times I get questions, can we insure that? Can we do that? Can we do that? Can we cover that type of risk? And my answer is, we cover anything that relates to the loss of operational capability of the satellite or launch vehicle. So if you want to insure the asset value based on the performance of those two things, yes, you can insure that. If you want to insure the loss of revenue, if it's based on the operational capability of the satellite launch vehicle, yes, you can do that. If you want to insure your art piece, if it relates to the performance of the vehicle, yes, you can do that. So we cover a lot of things, but the underlying principle has to be the loss of capability of the satellite and launch vehicle, and then we can provide coverage to that. Because remember, we provide warranty insurance. We have to understand what's being performed, and if we understand that, then it means we can underwrite that or attempt to underwrite that. Patton always says my rates are too high, but that's a whole other story we won't get into right now.
So looking at the future, as we were saying, the amount of insurance for a satellite has gone down over the years, simply because the launches have gotten cheaper, the satellites have gotten smaller and cheaper. But looking to the future, we have several companies that are building space stations as replacements for the International Space Station. Now, these projects are going to be building space stations that are where the replacement cost of that space station is somewhere between $1 billion and $5 billion. Now, there isn't that amount of capital in the insurance market for space. So how is the market, or how are you as a broker going to advise those clients on how they should insure their program? That this is it's a serious issue. NASA is very keen on replacing the ISS by 2031. So how will they find insurance? Or I should say, will they find insurance?
Well, it's a good question. And I don't think there's any obvious solution. I think certainly, you know, what we typically see in the space insurance market is that once you have an asset that is, you know, over $400 million, it can be difficult to start getting enough insurance capital to cover that asset. That also depends on how much heritage you have on that asset and how comfortable underwriters are to insure it. So if you want to insure a $400 million asset, it better be something that Rob's comfortable with and that his 25 competitors are comfortable with, because you're going to need everyone to underwrite that risk to get to that level. If you're talking additional levels from there, it starts to get, you know, a little bit more complicated. And you start having to look at options for self-insurance or looking at other types of creative solutions. Certainly, you know, we have clients that self-insure all types of assets, you know, whether it's space assets or whether it's property assets on the ground or whether it's, you know, liability type coverages. So there are different approaches that you could use. But you really have to work with the client to figure out what the best financial approach is for them and how you would structure that on a self-insurance basis, whether you could use a captive or otherwise. But there isn't, you know, a silver bullet or a single solution for trying to solve that issue.
So excellent point. So as clarification, what space insurers do, if there's, like I said before, if there's a small sum insured, a couple $1 million, usually one insurer can write that 100%. But if we're talking these bigger satellites, a couple $100 to $300 million, up to $400 million, or even a space station up to potentially $1 billion, the insurers all come together via the broker. We don't work together, but via the broker, the insurers come together and they aggregate all their capacity together. So we'll cover from first dollar potentially. Maybe we'll do something different if it's $1 billion. We'll cover from first dollar up. I might write 20 million, other person might write 20 million. It's just a syndicate of insurers who get on a portfolio of a risk, and it's all the same exact policy wording, all the same exact coverage. So right now, the capacity, working capacity is $400 million, probably around there. Yes, there may be a little more than that, but the actual working capacity means people where they'll be competitively priced is probably right around, well, maybe even less than that, $350, $400 million. So you would need all the insurers to come together at reasonable rates for someone to buy that type of limit. So buying $1 billion of coverage right now with the limited capacity that's available relative to $1 billion, there would have to be alternative forms of coverage, maybe a captive, maybe go to non-space insurers, because you're covering something that's stationary in orbit. Maybe you're covering more or less not stationary. Maybe you're covering, go to the marine market because it's something that's just stationary. Go to the property market or something like that. I think that's a heck of a stretch. I think it's going to be, bottom line, I think it's going to be extremely, extremely difficult to find full coverage for assets that cost that much. I mean, and a lot of insurers have pulled out recently because of the failures that have taken place, but also it's the concern of our market that there is going forward. Yes, there's a lot of launches going on. I mean, it's amazing the amount of launches taking place right now, but most of them are not insured. Most commercial big satellites are insured, but I mean, Starlink's launching every day. There's no insurance on those. There's a number of people that don't buy insurance for a variety of reasons. A lot of the smaller companies launching smaller satellites, they may buy launch-only coverage, but it may only be $1 million or $2 million. So there's not a big influx of premium coming to the market. So there's not a big attraction for insurers to come into the market because concerned about the profitability, concerned about the volatility, also concerned about looking forward and where is the market going to be as far as premium goes because of the lack of insurance that's being purchased. And let's face it, not many GEOs being launched. And GEOs is the space insurer, or was the space insurer's bread and butter for many years. It's really what we relied on. And the lack of GEOs being launched has really made a significant impact on our market. And all that's driving to the less capacity that we have in the market. 10 years ago, we may have had $700, $800 million of capacity for space, but that's just not there anymore because of the volatility, because of the losses, because of the uncertainty that's coming forward. So, well, it's my job to be a little negative.
Glass half empty over here.
My job.
So yeah, no, the bottom line is plan ahead and understand your exposures. So we touched. I'm going to do one more topic and then I'm going to open up to questions from the floor. So please think of some good ones. We talked a bit about liability insurance. So the FAA licenses launch and reentry in the U.S. for U.S. operators and for U.S. operators, whether they're launching from the U.S. or from overseas. Virtually all the other countries that have launches from their property require insurance for liability. The liability insurance covers bodily injury and property damage to uninvolved people. So, somebody on the beach at Cocoa Beach who gets injured by an exploding rocket or what have you, or an explosion and it breaks some windows in someone's house. That's what liability insurance does, and that has some statutory foundations to it. So, Patton, talk a little bit about how you see the liability market evolving and how your clients are looking at the liability market.
Sure. So, the liability insurance is much more of a focus on the launch vehicle side. So if you're a new launch vehicle company, the FAA is going to require you to meet financial responsibility. And that is typically for a newer company done via insurance. The FAA provides indemnification, or the U.S. government provides indemnification above that. But you're required to get an insurance policy to cover that primary layer. So I think the launch vehicle providers, it's a much bigger focus of theirs. If you're a satellite company and you're on a launch service provider, particularly U.S.-based launch service provider, as Chris was saying, you're going to get the benefit of that insurance policy that they're already buying. So you don't have to worry about a launch vehicle failure resulting in a liability issue and coming back to your company. You do have to worry about your own asset on that launch vehicle because you may lose your asset. But from a liability perspective, you typically don't have to worry about that. There's cross waivers and there's a whole liability structure that's in place to ensure that there's not inter-party litigation and that there's not third-party liability. So if we just take the launch phase, it's really not as much of a focus for the satellite companies. The focus for the satellite companies is really once they get onto orbit and whether they want to purchase liability insurance while they're on orbit. And if you're European-based, then you're required to buy on-orbit liability insurance. If you're US-based, in most instances, you don't have any requirement to buy liability insurance. And quite frankly, a lot of companies do not buy in-orbit liability insurance for their assets. But we do have some that do buy in-orbit liability insurance, and it may be because they're operating in a certain orbit that may have more satellites, it may be more conjuncted, they may be more concerned with liability. They may be operating on the space station, and NASA may require them to procure liability insurance because they're on the space station. So there's certain reasons why you may procure liability insurance, but if you're a US-based company, it's primarily, and you're a satellite company, it's primarily up to you.
Great. And Rob, on the underwriting side for liability insurance, how do you go about it? Is it the same process as you use for the asset?
Yeah, we do a lot of third-party liability, especially for launches taking place all over the world. And it's the same process, but light. We're just covering, most of the times, we're just covering the launch phase. So we have to understand the launch vehicle. But, the damage to third parties can only happen, in a shorter period of time, let's say a full launch dropping off a GEO or something like that. So we have to understand where it's being launched from, what's it launching over, is it going over the ocean? Okay, that's good. If it's going over land, okay, where is it going over land? What are you going to do? Where's your first stage going to fall? Where's your second stage going to fall? Where are your fairings going to fall? So we have to understand all of that in our underwriting process. But it's a very active market. It's becoming more active. There's a lot of Chinese launch vehicles that require third parties. So we're heavily involved in that. The US side, there are a number of companies that buy launch liability insurance, but there's a number of also who just use their own captives, let's say, to buy it. But the underwriting process is basically the same, just a little less of a review than we do for the first party coverage.
Excellent. Okay, I want to open it up to the floor and wondering, okay, we have a question back here. Do we have a, yeah, you got a mic. Thanks, Evan.
Oh, here, take that. Thank you. There.
Hi, Nico Donna, I'm the Director of Corporate Development at Loft Orbital. Quick question out of interest. So we've talked a lot about quantitative shifts in the market, supply, demand, maybe the standard deviation that comes with like single points of failure, even in the GeoComSat side of things. I think of Viasat-3, things like that. I'm curious about qualitative trends that you're seeing that are changing how you underwrite or how you price. I'm thinking maybe it's more exotic orbits, it's new type of technology that's going on board the satellites, perhaps other types of exotic missions that are making it kind of interesting in the market and are changing the fundamentals of how you do the work day to day. What are kind of those key trends that you're seeing?
Yeah, it's a very good question. When I started, and Chris can probably remember this, our policy wordings were like 5-6 pages long. Now they're up to 30 pages long. And that's really to take care of a lot of things we've learned over time, but also more importantly, how much things have changed. 30 years ago, you're just insuring a couple C-band, KU-band. It was relatively straightforward. And that's why maybe we didn't have that many engineers back then. But now it's a whole different world. Partial loss formulas may go on for 5-7 pages because the satellites are so much more complicated. So that's a really big issue in making sure you understand what the coverage is, making sure you understand what the satellites are. The reuse of bands that's taking place right now, it gets very complicated. It gets complicated for loss formulas, it gets complicated for salvage. So there's a lot of changes there. Also, the orbits, as you mentioned, used to be a majority of, like I said before, most of our income, most of our risk came from satellites that were just going to GEO. It was pretty straightforward. Now we have, we're insuring missions to the moon. We're insuring missions that could go low Earth orbit. We're insuring MEOs. Big change has been also constellations, insuring constellations. How is that viewed by the insured from their risk profile, and what's our risk, our view of the risk? Is it 100 satellites? Is that really just one satellite? Do you look at it that way? So there are a lot of different changes that have taken place that have really we've had to adapt to in our view of the coverage.
And I'll add to that with the changing landscape of space activity, different technologies and applications, I think what we've seen is more differentiation in pricing between the known technologies and new technologies, where, as Rob said, it used to be everything was in a very narrow band. The other thing to understand about insurance, and this goes for automobile insurance too, I like to tell the story that when my daughter got her driver's license, she had 3 accidents in the first 4 months. Now, I was buying that insurance. I shouldn't have been able to buy insurance for her based on the pure technical probability of loss, right? But I could. And that's because there's this compression of pricing where in insurance, the best risks, somebody who's never had a loss still has to pay for their insurance. The best risks pay too much according to their technical rate, and the worst risks pay too little. You can compress it so that the pricing is in a narrower band and still make sure that your portfolio generates enough premium to pay for itself. But that's something that I think we've seen in recent years, is this differentiation between different types of risks, which we used to not have. Question over here?
Thank you to all the speakers. Vivek Sakrani from Earth observation company Atlas AI. Could you speak to the interface with the upstream part, the supply chain on components, the manufacturing interface, since presumably there's linkage there with the quality of the asset itself, especially as it's getting ready for launch, and also to the insurance segment of that market? Is that typically shallow, and what's the outlook for that sector as manufacturing goes up?
Sure. So there's a lot there in your question, but I'll try to just answer it in parts. So I think from a component level perspective, if you come to us with a new satellite, we are going to look at what's being done on the component level, because the underwriters are going to be looking at that at the end of the day when you provide them a briefing of your spacecraft and mission. You know, you may have redundancy in your spacecraft. Hopefully you do. Hopefully your components are redundant. But regardless, they're going to want to understand what the heritage is of those components. You know, are they familiar with these companies? If the components are mission critical, that's going to be really important for them to understand who manufactured those components and how those components have performed previously. So that's something that Rob can comment on in a second, but they're going to be looking at that. So we would work with you ahead of time to flag potential issues and figure out, okay, well, how are we going to address this with underwriters that's a concern. From for those companies themselves buying insurance, that's something that our company does and Rob's company does. It isn't necessarily a focus of mine on a day-to-day basis, or probably a focus of Rob's, but they can buy stuff like products liability insurance if they want, and other things. I think from a space perspective, space tends to be less litigious than something like aircraft, where you don't necessarily have people involved in every mission. I mean, sometimes you do, and obviously we're getting more involved in that. But really, the subcomponent and the supply chain should be looking to protect themselves through their contracts and making sure that those are best efforts contracts and non-recourse. That's the best way to protect themselves. And they can buy products liability insurance as well. But at the end of the day, you want to make sure your contracts are protecting you.
Hi, I'm Lee Jae Ju from IC Mercury, a personal satellite service provider. We just launched our first satellite by SpaceX last month. And before we launched the satellite, we actually consult with the insurance company to see how we can insure a pocket cube satellite. Pocket cube is very cheap. The question is, if a customer buy a pocket cube satellite, can we have the business process insured rather than just the product itself? Because if something goes wrong, it's actually can be wrong in many parts because it's a long supply chain. We have a launching partner, we have manufacturer partner, and also the network. There are many aspects of it. Apparently, when somebody buy a small product like a pocket cube, they don't want to pay for the whole process. So I'm asking the smart people on the panel, how is it possible to actually allocate that little risk of the buyer, the end consumer, to just insure their little share, like buying an airplane ticket. They don't want to buy the insurance for the whole plane. Thank you.
I'm a little confused on the question. Are you talking about ensuring the performance of the Pocket Cube itself and the impact that may have on third parties? You're being, yeah,
The investment is not big.
sure. Yeah, yeah. So the answer to your question is yes, that can be insured. It goes back to what I said before, it's ensuring the capability of the spacecraft. And if the capability is not there and you lose customers, or the customer can't get a service that they want, and there's some type of financial impact to them as a result of the satellite failing, that can be insured. I think that answers your question. But, well, so yeah, absolutely. We've done that before on bigger satellites where individual investors insured their financial interest in the satellite that would have been lost as a result of the poor performance of the satellite. So yes, that can be insured. The difficulty is with pocket cubes or even CubeSats is that's why many of them are not insured, is because an insurer, unfortunately, a lot of them fail. I hope yours doesn't fail, obviously, but a lot of them do fail. And the risk is very high for us. So the rate for that would be very high for that. So we really don't find many people insuring those. But again, if it has to do, we have a very small pool of people that want to buy space insurance. So if someone wants to buy $500,000 of insurance or $500 million of insurance, I'll talk to them. I don't care. We have to, our spread of risk is we go against everything that's correct about insurance. We have no spread of risk whatsoever. I mean, Chris mentioned before, auto insurance, they're insuring millions and millions of cars. We'll insure 30 launches a year. So there's no spread of risk. So we'll talk to anyone who's interested about buying space insurance and try and find a package for them that meets their needs. So hopefully that answers your question.
And I think it's important to understand that when we insure, let's say we're insuring a transporter launch, we're not insuring the launch vehicle itself. We're insuring the customers on that vehicle. So if they're launching 100 satellites, if SpaceX is launching 100 satellites on a transporter mission, say that's 100 satellites for 50 different clients, we may insure one client for their 3 satellites. We're only insuring those 3 satellites on that launch. So if the launch works, if all the satellites deploy properly, we're good. If the launch works, but a few of the uninsured satellites don't get deployed, not our problem. They didn't buy insurance. So yeah, it's important to understand that in your case, yes, you can just insure your satellite as a portion of the whole launch. So absolutely. A question? Sorry. Yeah.
My name is Alexandra from Aerospace. We build and launch vehicles. So my question about claims adjustment, what is the process of claims adjustment and who is doing investigation? So a lot of information is protected by ITAR and we cannot disclose this information. So how do you do that? And what is their way? How do you disclose this information and how we provide this information to you?
Good question on claims adjustments. I'm a unique person in our group for many reasons. One is we do underwriting all the way through the claims process. Most underwriters just do the underwriting and they hand it off to a claims person. But there's not a lot of risk thus there's not a lot of claims. So we do really from A to Z. So from an underwriting point of view, we do the adjustment. As far as information goes, it depends on what the loss is. If it goes up and blows up, I don't need anything. I mean, I need to know for the next launch what happened and why it happened. But if we have the video of it blowing up, as Patton mentioned earlier, I could pay within a week. So the transfer of information, I think this has been going on for 25 years now through ITAR and worrying about ITAR. I think we've got our hands around that, and I think the brokers do a great job, the manufacturers do a great job, and it's not a stumbling block for insurers, whether it be domestically or internationally, to get that information. So it's really kind of a non-issue there. As Pat mentioned before, partial losses are trickier because you're relying on the information the client gives you. You're relying on making sure everyone understands the loss formulas. So that's much more of an elongated process.
Yeah, I would also say that if you're a launch service provider, liability is also a big issue, launch liability. And, those instances are rare. I mean, if you have a failure, right, odds are it's not going to end up as a liability issue. It probably will just fall in the ocean. But if you have an issue on the launch pad, for instance, and you're on a federal launch pad or a state launch pad, or a combination of the two, those claims can get pretty complicated. So you want to make sure that you have an insurer that is leading, that particular risk, that really understands how to handle those liability issues, because they can get pretty complicated and they can drag on for a while. The state's going to want to get paid back for their damaged pad. The government's, if you damage government property, they're going to want to get paid for that. So you need to make sure that you have the correct coverage in place to respond in that situation.
I think we're at time, but I want to make sure that please approach any of us after this, during lunch, whatever. We're happy to talk about it. We're all pretty passionate. We all have 25, 30 years or more of experience in the business, and we really enjoy educating people about the process and what we do. So please feel free to come up if we didn't get to answer your question. And with that, please give a hand to Patton and Rob for their work there.